Here we go. Good, microphone working. Everything looks good. I like it when it all looks good. 3, 2, 1. Hello guys and welcome to another video. My name's Mark, I'm an entrepreneur and property investor. And in today's video, we're talking about how to legally avoid capital gains tax. And specifically, we're talking about how to legally avoid capital gains tax with property. Now, what I'm going to talk about, it is widely known. I have to confess, it's a slightly clickbaity title, but I do think it's important to talk about. And I do think it's one of the main reasons that property is such an interesting investment case for me. So before we get into the video, if you could possibly give it a big like, it really helps me out with the YouTube algorithm. And if you haven't already subscribed, why not consider subscribing? We do all of this completely free of charge. There's no upsell. I don't run a training program. I don't sell a training course. So everything that I do here is just to bring as much information and as value to you guys as I possibly can. So with that in mind, let's get onto the video and let's talk about why and how you would legally avoid capital gains tax when it comes to property, and why that really, for me, makes property such an interesting investment case. Now, the key word in all of this is refinancing. And what refinancing really allows you to do is take out some of the equity, some of that capital that you've built up, and it's going to allow you to borrow against it at a very nominal cost. Now, at the moment, if you have a look on any mortgage calculator, you can see that in your personal name, you can get a 2-year buy-to-let mortgage at 1.5%. Absolutely crazy money. Now, just to put that in perspective, if you borrowed £100,000 on a 1.5% mortgage, you're talking £1,500 per year in interest, which is almost nothing for the amount of money that you're having. £100,000 out and you're only paying 1.5%. So if we quantify this and we think about it, first of all, this rate is less than inflation. So in real terms, we're borrowing for less cost than the depreciation in the value of the currency. And this is an absolutely insane concept. You're able to borrow and essentially pay back less. I think that's an amazing thing. So that's the very first point I want to make. At the moment, this is a huge advantage. The second point I want to make is the fact that if you were to pay capital gains tax on residential property, you would have to pay 28%. Now, if we consider that we're currently borrowing at 1.5%, and obviously in a limited company, it's slightly more. I think I've just done a single limited company mortgage at 2.7 or something like that. So it is more in a limited company, but we're going to focus on this 1.5 at the moment because really capital gains tax only comes in if it's a property's in your personal name and you sell it. Now, obviously, let's say, for example, we did borrow this £100,000. Well, we've also still got a tenant in place that's paying the interest on this. And if we bought well and we structured the deal well, hopefully we got a profit in there as well. And anybody who knows me, single let, 10%, HMO 15 to 25%, anywhere in those sort of regions, you're going to be happy. And on top of that, this interest is going to be covered. So it's essentially the ability to unlock value in the property that you've accrued as the market's moved on and only pay a nominal fee in exchange for doing so. Now, that is the main advantage with property over business. So for example, if you have an ISA and let's say, for example, you have £100,000 in there and that's paying you, let's say, £5,000 a year in dividends. And I know that's a 5%. I'm just keeping it nice and easy. There is a high income fund. I think, let's say 3,200, because there's the Vanguard high income, which pays about 3.2%. There's the FTSE 100, which pays about 4% at the moment. But let's say 3,200, just so that I make it a real world example. You're going to struggle to go to any bank and say, hi, could I possibly borrow £100,000 or even £75,000 against the value of my ISA, and I know that the dividends are going to cover the interest payment that I'm going to have to make on that loan. Banks won't allow you to do that. Now, at larger scale, people do borrow against the value of their stock, but at a small scale like this, it's just simply not possible. Now, when we start talking about refinancing property, because the asset is such a bricks and mortar asset, it's very tangible, and the market is so vast, i.e. UK property is a big, broad market, the banks have confidence in the value of the property. So they're going to lend freely on that collateral. And that's what it really is, it's collateral. They lend absolutely freely on that collateral. And at the moment, 1.5% is less than inflation, which means that if on an inflation basis you were to borrow the money, you pay back less. Now, just concentrating on this 28%, if we just considered that as a point, let's say, for example, we borrowed £100,000, and I know you get a capital gains allowance and all the rest, but I'm just going to make it really easy for myself, and we had to pay £28,000 in tax. Well, it would take an awful long time for us to pay the similar amount in interest, wouldn't it? It would take us, do you know what? I'll work it out for you. It would take exactly 28,000 divided by 1,500. It would take 18 years for us to pay the equivalent in tax in interest. So even if inflation wasn't the play, holding the asset wasn't the play, even if it was just a case of deferring the tax, it would still, in my mind, make more sense to refinance. Now, I accept there may be some assets that you want to liquidate, that you don't want to be in anymore. Maybe you don't believe in an area. Maybe you've historically bought in, I don't know, Blackpool or somewhere that's very cheap that hasn't got good fundamentals behind it, and you're noticing that the properties there just aren't renting out the way that you thought they would, or the return on investment isn't what you thought it would be, or the capital growth isn't what you thought it would be. Any number of issues, you may still want to liquidate that position. But if you've got good fundamentals behind it, I can't really make a business case with interest rates being so low for selling a property. I can only make a business case for refinancing and then outsourcing all the work, because I don't believe there are many places in the UK, London maybe, Central Prime maybe, but most places that we as investors are looking at, you're going to cover this interest payment and more with the rent, and you're going to have access to the money and hold the asset. So if you believe in UK property and you think UK property is going to continue to rise as it has done for the last 100 years, I personally believe it will for many reasons. The first one being inflation is a constant, it's always there. We always will make sure that we've got inflation because it's so important for the economy. You just have to look at Japan. They went through a period of deflation. They're just printing and printing more money. Japan's debt to GDP ratio at the moment, 230%, because inflation is just so key to stimulate growth. So my personal thing is that inflation will always be there. With that in mind, the value of properties will always go up, even if all things else stay equal by the rate of inflation. Certainly the cost of building them will go up by the rate of inflation, and eventually the house prices will rise. And if we just look at recent history, we could say in the last 10 years they've doubled, or close to doubled. Certainly in the last 6 months I've added the best part of 5 or 6% to the value of my properties. So I think there's a good play in there for refinancing properties, holding on to the asset for the long term and making sure that you become wealthy over time. But guys, let me know your thoughts, because I'm really interested. Do you believe that you should be refinancing the properties, or do you think you should be selling them and getting all of the capital back? Even later on in life, I can't really make a case for selling them. I think it's still going to be better to refinance, take the money out and use that money and then still have the asset, even later on in life. So I can't really make a case, and this is why my exit strategy on my property portfolio is actually death. That's my exit strategy. I'm going to pass it over to my children when I'm gone, and they can continue to run it. Hopefully by that time it's going to be much bigger than 3 million, but we'll see. I'm very much hopeful we'll be able to increase that. So guys, let me know in the comments, massively interested. I believe rather than selling, rather than paying capital gains, you should refinance. That's my perspective. What's yours? Let me know in the comments. I'll see you next time. Boom.